Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. There was a huge jump in Nvidia off the earnings, up 30%. Markets chasing after it. Is this a new bull market or is this a blow off top? Well, we're going to go over the data and you guys will find out in this video. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
So Bob, for a mega cap to do a 30% move off of an earnings call is something that I don't think most of us that's been in the market for a while has ever seen before.
I've never seen it. And it's not like it was a company that's price to sales of 2. This had a price to sale going into the earnings at 29, Phil.
Yeah.
And we're going to give people perspective on that at the end of our call. But they ended the week at 35 price to sales. And the ironic thing about NVIDIA is that its market cap grew bigger than the entire market in which it's supposed to occupy. And you guys remember last week when we said AI is the next bubble? Well, this is what a bubble looks like. And there's no rationality behind it. It just, people pour into it because they see somebody struck gold in the hills. And everybody's going to push in until it blows up. But the problem with NVIDIA is that it does this a lot, Phil. We should have probably had a monthly chart up here. This is the 4th or 5th time NVIDIA has moved up 100 plus percent and then dropped 60-70%. And it's done it 3 times since 2008. So this stock is extremely volatile and it's prone to these actions, but people are clinging to everything and anything to make money here at the end. And but what we want to show you is a little bit of an anatomy of what I think. I don't know, some could call this, was there really fraud here a little bit? Because on Tuesday, which is really shocking to me that the CEO spoke the day before his earnings call. Usually you have to keep your mouth shut. But he went out there and he was musing that because Micron lost its access to the China market, that they're going to be next, which would give people like, okay, why is he saying this right before earnings? Is something bad going to happen? And this and that and the other thing. And I'm sure more people shorted the stock and bought puts into it. And essentially all he was doing was he was calling for the firewood supplier to come and lay it into the fire pit for what he was going to do on the announcement the next day. And the next day he went ahead and I had a chart up. I think you can throw this one up, but the chart I was going to show is that they announced earnings, Phil, and they announced revenues declined 13% quarter over quarter. Okay. And then when that happened, the very next thing he says is, well, we're going to grow 50% quarter over quarter. And the stock price just lit up like a bottle rocket on the 4th of July. And it didn't look back. And all those people that were leaning into these earnings reports were absolutely screwed. And, they're screwed through today because options expire on Friday. And they're also getting a tailwind because people are always trying to lift into a 3-day weekend. And then plus the debt talks, optimism. So I'm sure people got carried out on their stretchers on this one, Phil. And we stayed away. It's good to stay away from earnings anyway, unless you really know what you're doing or you're properly hedged or you know how to play these games. But I've been doing this a long time and earnings are never my friend. So I just kind of stay away from them and see how you can trade them afterwards, where usually there's a good opportunity about a week after earnings to catch a fade. And before I continue on with the story here, Phil, I kind of want to throw in and give you some chance to talk here a little bit.
I think this is reminiscent of the 2000 tech bubble. And it's funny because we're having this bubble-like capitulation move, and the S&P 500 is severely lagging tech, right? And it wasn't such a disparity back in 2000, but I see all the same things, And the funny thing about the tech bubble back then was that it wasn't so much that the tech was wrong. In other words, the internet was here to stay. Some of the technology that was being bought up was here to stay, but it was what companies were able to last through that bubble. A lot of them are not here today. Right. So although, yes, e-commerce was a big thing. Look how many e-commerce companies died, didn't even make it to 2001. And so I think AI is a lot like that. I mean, you're talking about a tech that changes by the week. I mean, if you're on Twitter, they're introducing new plugins and there's new this and new that on AI constantly every week. So it's evolving much more rapidly than, say, what was happening with like the e-commerce boom in the .com era. And so I just think that it's impossible to give any guidance on any of this stuff. We're just so early into it. It's just like crypto. We talk about, we're in the crypto bull market, who's going to be here on the next cycle, right? Or who's going to be the Google of the blockchain or, things of that nature. And then you're going to have those situations where somebody's going to be the Yahoo and you think, well, Yahoo's the one, we should have gotten long Yahoo. And then they get upended by someone else like Google. And then, you really should have been long Google, or the Google hasn't even appeared yet. So there's all these things. And I just think that we're getting ahead of the skis. And that brings up another point, Bob, which you found was the comments from Scott McNealy. Those of you that are newer to the markets won't know this name, but he was the head of Sun Micro, a very popular company back in the 2000s, made great hardware, but it was all, more infrastructure stuff, higher end data center stuff, but really bulletproof hardware. They didn't manage the .com era very well, but, Bob, he had some interesting comments. I think it really puts into perspective how far over the skis we are on a name like NVIDIA. And, it's all bulls and sunshine and rainbows and unicorns. But as you said, NVIDIA has the propensity to V-reverse these moves, and they do it pretty quickly. And I honestly think, Bob, from here, we're going to probably see NVIDIA sub 100 faster than people think.
Yeah, look, I mean, people, before I get to the story here, people think that NVIDIA has a moat, and they don't. NVIDIA is really at the high end of the graphics gaming, but, the game in town isn't, just high end. There's a really a lot of smart people that when hardware gets too expensive or gets too narrow in terms of competitors, really smart software people take cheap hardware and they do a lot of things with it. So look, I was in the software industry during McNealy's day, and these guys were rock stars. Yep. McNealy, you had a guy from Cisco, and you had Andy Grove from Intel. These guys walked around. When I was at tech conferences, these people walked with entourages with them, Phil. And anything they said was just like, from God's lips to my ears kind of a thing. But Scott McNealy was a different cat. And he's a little bit like Elon Musk is now, to talk down your stock price because he just sees that things are getting out of hand. And basically what he was telling people, and I'm not going to read this whole thing, I'm just going to explain it to you. If you have a company that's trading for, in his case, it was 10 times revenue, he says that he would have to give 100% of the revenue that he generates without any cost to you, the shareholder, as a dividend for 10 years straight. That means no commissions, no cost of sales, no working capital, no taxes, no CEO pay, nothing. In order for you to do that, basically he was saying, he goes, that is absolutely ludicrous, especially in the tech world, where unless you have a really strong patent and a moat, that's not going to happen to you, especially in hardware. Things have changed a lot. And now we're looking at NVIDIA. NVIDIA's at 35 times revenue, Phil. 35 times revenue. That means for the next 35 years, NVIDIA has to produce that much in revenue in excess of their cost structure today. Okay? 35 times their cost structure for the next 35 years in order for you to justify that price. And that is simply impossible.
Yeah.
That means they would have to grow faster than the GDP of the United States. Not faster than the GDP of the United States.
Yep.
Okay. They're trying to assign a $1 trillion market cap to this company. And they made $7 billion, Phil, last year.
Well, Bob, crypto had Pepe coin blowing off. I think tech's got Nvidia blowing off. I think they're all. I think if you look at the Pepe coin chart, and don't get me wrong, Pepe is a great meme. But you look at that chart, and I think that's foretelling what's going to happen here with Nvidia. I really do.
Yeah, Pepe already blew up, right?
Yeah, it's on its way back down.
Yeah, guys. So, and look at, we're always accused of being so bearish here, but really this cautionary tale. I mean, and by the way, these moves come down fast, okay? And you'll be in a situation where, just like silver in 2011, we're up 7x on our trades in 6 weeks. And in 3 days, we gave half of it back. 3 trading days. Because the first day you don't believe it. The second day it bumps up a little bit and you say, oh, that was nothing. And then the third day it blows off when you're like, shoot, I got to get out.
Yeah.
And I think that's what's going to happen here too. So our view is, and stays the same, is that once this deal is announced, and they're milking it, once this deal is announced, you give it 3 days and you can get short with confidence because Janet Yellen's going to suck the oxygen out of the room. With that, Phil, Colin, all I want to share today. I'll see you guys tomorrow.
Yep. Thanks, guys. Please hit like and subscribe and smash that notification bell and set it to all if you can. Check out our specials. Check out our liquidity tool. Call the number in the description box below if you're interested in that FedNet liquidity tool, or if you want the newsletter, you can click the link up above. Other than that, thanks for watching. We'll see you on the next video. Take care.
Trade Genius.